Like to start with one or two. I will have joining me for some of the survey questions, two of our delegates. But let's start with the first question and get the sort of take of the room on what your opinion is. And of course, this is around the oil price. What will Brent crude be on the last trading day of this year? You have there 5 choices. Of course, we know where we're at today, and we've been comfortably in the 60s for quite a few weeks now, and we've seen the trajectory of where the oil price has gone this year. But again, you've got 80 plus to $60 or below. So we'll start the clock now and see what we get. You can come, you're most welcome. I was going to call you up in a few minutes, but Jarand, you're very most welcome. Mr. Jarand from Rystad, and I will invite Sara Akbar, who is one of our winners from last night, of course, the Lifetime Achievement Award. Another round of applause, perhaps, for Sara from OiLSERV Kuwait. Please, both of you, please come up and join me. I won't be calling on your comments yet, but please, thank you so much. And your mics are there and ready. So let's have a look at the results. Okay, that's quite decisive. 35% were in the middle of the range, 35% for close to 65, which is about where we are, 31% 70, slightly more positive than where we are at the moment. So playing it safe as we go towards the end of the year. Most of the room thinks we're going to more or less stay where we are. I'll come to you later for your comments on that. Okay, let's have a look at the next question. Now we're looking at next year. Again, same question, but average prices. The question before was where are we going to end on December the 31st? Now next year, what is the outlook and where do you think we're going to average throughout the year? Let's have 10 seconds on the clock, please. Okay, 29%, 23%, 65 to $70, the majority of the room is voting for, which is, you know, quite close to, of course, where we are today. Jarand, you have a clicker there. I don't know if you had a chance to vote, but tell me, how would you have voted? Let's look at, I mean, we have the first question of where we're going to end this year and the average for next year. What would you have voted and why?
Yes, I would be in the lower end of that because both this year and next year we see a quite modest global growth, maybe 0.8, maybe 0.9, and we see a lot of new supply. So in that situation, you typically have a downward pressure. So just 1 year ago, I was on the same stage here with with Gulf Intelligence. The oil price was 75, and we got the question, what will it be in 1 year? And 3 analysts answered 75. I actually said 65. I think that was seen as completely out of consensus. But the fundamentals tend to go through, and with all the infill drilling we saw post the very high prices we had in 2022, it is actually a lot of non-OPEC oil also coming into the market. So I think we are in the fundamentals speak for itself. When you have more oil than demand growth in the market, you will see a depressed oil price. So 65, I think, is not a bad bet.
Okay, and I mean, you were saying a year ago you thought we'd go in this direction. You said you thought we'd go in this direction this year. You were right. Some others were more hopeful. We did start the year, of course, stronger. Thanks, Jarand. Sara, I mean, why have we dropped this year? What would you say is behind the drop in the oil price this year? Were you surprised at that? I mean, sticking just to the first question of what's happened this year. You need to use your microphone. And please, both of you, remain very close so we can hear you, yes.
Good morning. And I would say, abracadabra, what's the oil price? And normally, oil price does not
Sara,
go
please,
by consensus or by polls. It goes by fundamentals. And the reason behind the oil price this year, as you noticed, since Mr. Trump came into power, and he's all about, I want a lower oil price, I want a lower oil price, gas price, that's the driver. And he's pushing. And you know, what we learned so far is what he says he does. So that is, you know, from a political dimension, there is a dimension there.
I mean,
But
when you say he's pushed it, you mean he's pushed producers to produce more oil?
Well, he tries. He tries. Yeah. But the reality is OPEC Plus has put some more oil into the market, and this is the trend. So the trend, they are adding slowly into the market, and that will actually psychologically give the market the signals that, look, this is the price where OPEC is comfortable. And let me reassure you, what OPEC is trying to do all this time is to ensure the energy security for the whole world. So they don't want to see that zigzag coming up and down, because it doesn't help with the investment. As you know, this is a result of the investments that we do in the industry. And if you see the latest report from the EIA, you know, there isn't enough, you know, let's put it this way, enough investment going to the upstream in order to provide all the supply. That's why at this point in time, there are many, many people, investors, who are actually looking to invest. And when that happens, the oil prices tend to be suppressed. So that's what happened.
Okay, thanks, Sara. I mean, we've got another set of questions which address actually one or two of the comments that Sara just made. But before we leave these two results, Jarand, just back to you on next year. I mean, the average, again, we're looking at a similar one according to our audience here. Would you agree with them this time? Or are you perhaps more pessimistic, given what we're seeing, you know, on the global macroeconomic front?
Yes, I think maybe still I would be on the lower end, closer to the 7% or this 16%. Since, as I said, demand is quite modest and we have non-OPEC growth of maybe 1.5 million barrels. So the lower it goes next year, the more it will recule back in 2027 and 2028. So I'm very optimistic on the oil price in 2 years' time. But next year, I'm still not very optimistic on the oil price. But of course, it is in the hands of OPEC. And I think OPEC has very successfully managed the oil market over the last 2 years. And I think they are in a position to continue to do that. So I think it could actually be influenced quite efficiently. And then a sweet spot might be in the middle. So, but then we need to see different ambitions than bringing back all the volumes.
Okay, interesting that you say it's in the hands of OPEC. We'll see if everyone else agrees with some more questions. Thank you. Emma, let's have the next question, please. We have a set of questions that we're going to put to everyone and get their opinion. We're back to OPEC Plus decision. They've been raising supply quotas, obviously, this year in the face of uncertain demand, according to the market analysts that are producing those reports out there. Despite that, they've been increasing, putting supply back into the market. Does that signal the end of this sort of oil market management, where they were, of course, cutting supply to support prices post-COVID, etc.? Do you agree or disagree that this does mark the end of that particular oil market management era by OPEC Plus? Let's get the results from the room. 10 seconds on the clock and from our guests on stage. Okay, 67% agree that we're seeing sort of a turn of strategy, if you like, and we can get into the nitty-gritty of what that is. Sara addressed one or two points there. Let's have the next question, then we'll get some comments. The IEA has forecast global oil demand growth in 2026 as the same as this year, 700,000 barrels a day. OPEC expects double that amount next year. Again, we saw in the last year or two, IEA and OPEC and other agencies indeed differing on their forecasts for demand. The reality, I think, came out more or less in the middle in certain quarters. But which is closer to who's going to be more accurate? Is it the IEA, OPEC, or will it be somewhere in the middle, which is a safe answer? But, you know, again, we've seen the different agencies differ quite a lot on that. So again, let's get 10 seconds on the clock. Okay. Everyone's playing it very safe this morning. 54% in the middle, but IEA getting 10% more than OPEC. That says something. Okay, let's get the next question, and then we'll go to our panelists for some commentary. What will be the biggest impact on the direction of oil prices? China demand, OPEC plus supply, geopolitics, US macro policy, rather than slow down so far. And of course, the other producers in the world, non-OPEC plus oil supply growth. So which of those will have the biggest? Of course, they will all impact the price one way or the other. But which would you say would have the largest impact next year? 10 seconds. Wow. Okay. Let's keep that result up, Emma, for now. I'd like to go to Sara to ask you how you voted. I mean, in the last few months, despite the nervousness in the market of oil flows and, of course, a lot of disruption in this region geopolitically, but not on the water, people have said this premium is there supporting the price, but it's not really actually influencing it more than other factors. What would you say?
Well, I voted OPEC plus supply.
Okay.
OPEC has always been right, so I am...
Kuwait is an important member of OPEC.
They have been doing a fantastic job, so I can't see why this will change. And they have been so flexible in managing where they want the price to be. And that's why I think, for me, like you said, we had almost a nuclear war in the region where you have 25 million barrels goes from this Gulf, and nothing happened. So why would geopolitics have that impact still? So that's why I am saying the most important factor here will be what OPEC decides, and they have been very rational, very reasonable, very accurate. So
they've certainly managed the market well, I'd say. Most people would say. Jarand, I mean, tell us what you think, and how much of the current price would you say is the premium, geopolitical premium support? And also, I'd like you to address A, which is China demand. I'm surprised it only got 19%. Even in recent weeks, we've seen it support the price quite strongly.
Yes, I think the big picture is that the macroeconomic or the risk premium is much smaller today than it used to be historically. So it's surprisingly small, I think. But I think just now, over the recent week, it's probably been $5, something like that. So it has been there, of course. There's some fundamental risks.
That's a lot. $5 is a lot.
Yes.
A lot of support.
Yes, yeah. but you have historically you have seen much more sensitivity in the oil price based on geopolitical events than what we have seen over the last 2 to 3 years. So in that sense, the oil market has become more robust. I think we have been almost used to these kind of very disruptive geopolitics. In terms of China, China had a demand in 2023 of crude oil that was 15.34. That has been lower in 2024 and 2025, breaking a very steady trend of growth. So China has been the engine of global oil markets growth. It's no longer. So I think the audience here also is acknowledging that basically the time of growth in China is over. And despite they have been filling their storage with at least 170 million barrels so far this year, it's the total crude import is most likely down. So I agree that it's not going to be the big impact. I think I agree with you. B is most probably going to determine the price next year.
Okay, I mean, Sara, back to you. Let's talk about non-OPEC supply then. I mean, OPEC, obviously, it's 30% plus of the global market. I mean, there are other producers out there. But at these prices, how will non-OPEC plus supply, given their cost of production, fare? I mean, will they be influencing the market going forward or not? US, of course, being the largest producer.
Yeah, so typically the US is hugely...
Can you put your mic?
Yeah, sorry. So in the US, it's hugely impacted by the investment and by the private equity and the money that goes into the industry. So the decline curves there are huge if there is no investment into the oil and gas. And no matter what drill baby drill says or whatever, it's an economic factor in the US. People do not go by the policies more, they go by the economics. So if there is money going into the industry, then you will see that they can maintain the levels of production they have at this point in time. I don't see any growth really coming forward from the US. So non-OPEC, the biggest non-OPEC producer at this point in time, Brazil, Guyana, and West Africa. So with the projects in hand today, there isn't much that is coming additional to what we have. Now, for OPEC, it is important. You know, there is pressures within OPEC, huge pressures within OPEC to increase production because we have closed capacity, and as you know, closed capacity costs. And most of these countries do need to have that additional. So that will be the driver to bring more production into the market, and that's why I'm saying the prices probably in 26 will be kind of to the lower end simply because of the pressures to put more crude into the market with the production that is coming from outside of the OPEC. I don't see the change in the US, but the other countries probably they will be adding some more production.
Okay, all right, thank you, Sara. Let's go to the next question. If the US and China, is that the correct question? Okay. That's new to me, but yes, okay, sorry, that is the correct one. No, it is right, yes. If the US and China increasingly operate outside the global rules-based system, other countries will follow and do the same, leading to rising uncertainty, drags on productivity, and lower economic growth. Of course, I mean, we're talking about now the global trading system, the whole tariff discussion that has been sort of triggered by President Trump, but you know, more importantly is how countries are reacting to that. Let's get the answer, and then we'll go to our panelists for their comments. Okay, so 70% think that this current sort of back and forth, of course, it's not just China, the US with everyone in terms of its trade negotiations with Europe, with other countries in Asia. And of course, that's all going to impact oil demand at the end of the day, and shipping and trading, the subjects of concern to many over here. Jarand, let me go to you with that. How disruptive has this uncertainty around the future of trade, of tariffs, cost, of exports, of imports been on the global economy? I mean, so far, I would say the global economy has fared quite well, given the uncertainty. What would you say?
Yes, in the first quarter, it was very low growth globally due to all this uncertainty. We have catched up in the second quarter on the normal pace, but we have lost the first quarter. So for certain, it has been already a damage to the global economy that has happened. Yes, we have seen the impact already.
Okay. Sara, how did you vote? Did you agree or not? And how is it going to impact, do you think, oil demand, if at all, if this continues?
Well, I agree 100%. I think one of the issues is in most of these forecasts, we have not factored that properly because of the uncertainty and the amount of uncertainty that goes around, for example, inflation. You know, one of the factors here. In the US, for example, like I said, it's function of investment and economics. Now, the tariffs on metal will definitely impact the industry and will make it more costly. When it becomes more costly, people don't invest. So there are few elements here that will impact the industry which are not factored in at this point in time that will come and will be clear, but this is a huge disruption, no doubts.
Next question. Now, this is a subject that's on the program these 2 days, the dark shadow fleet. We've got actually a speech and a panel coming up here in the plenary on this topic. because it's becoming ever more important and present and is not going away. The explosive growth of the dark shadow fleet now estimated to represent close to 20% now of the world's oil tankers. It poses one of the most urgent challenges to global shipping and trade. Of course, the dark shadow fleet becoming more prominent, since sanctions were imposed on Russia and, of course, other sanctioned countries as well. Agree or disagree? Is it one of the most important challenges to global shipping? Okay, 68%. Jarand, let me go to you with that. I get the sense that the market has learned to operate with this from a sort of supply point of view, not a lot of disruption because of this.
Yes, first let me say I'm surprised about the answer, because I think we have discussed other topics just recently with global trade, with global geopolitics, etc., which I think is much more impactful. But I think for the shipping fuel consumption, this has some implications, because this shadow fleet is burning very heavy, very sour, very inefficient crude in a very inefficient way. So maybe the consumption is bigger than we know, but we have very, very little reporting on that also. So I think it's big impact on shipping fuel consumption, but on global shipping and trade, I think I would rather disagree with this statement.
Okay, I mean, Sara, give us your take. I mean, obviously, that's, we're talking about, shadow fleet is because of sanctioned oil still going to, Iranian oil, that includes Russian oil, going to countries like China, for example, India. We've seen the headlines around Russian oil into India recently from Donald Trump. How did you answer this question?
I agree. I'm sorry to disagree with you, but it's become now de facto there. It's been there for a while, and it has systematically, consistently been there. But Diala, if we seriously wanted to tackle this, it's not the shipping itself. Let's see where is the money going. And if you look, this is not the only challenge. The crypto is the other challenge, because a lot of this trading behind this, you follow the money and you can solve this problem.
And I mean, in terms of the money, then you're talking about sort of the secondary sanctions as well, and the measures on that. There has been talk about that, obviously, by the US in particular. Jarand, is that having an impact, secondary sanctions on countries like China, in terms of the banking system and where the revenue from this oil trade goes?
I think not very much. I think there's been some, what should I say, attempt from China and India to, for a short period, signal that they want to listen to some of the secondary sanctions. But so there's been a few signals, but not really to a big extent, I think. So still they're importing a lot of Russian oil despite the sanctions.
Okay, I mean, I think one of the big concerns is obviously that it's unmonitored, and so environmentally there are concerns if something should happen, etc., for any cleanup measures that may be, and of course insurance and all those industries that are impacted. Okay, we have one more question to put to all of you. Energy transition. The energy transition is dead, and I'll explain that, is dead, and we are now in the era of energy transformation, meaning, the energy transition for many years has been talked about as an either-or situation. We either have to go full-on energy transition, i.e. change tomorrow, versus energy security, or, energy transformation. Are we now adjusting to the fact that this transition is indeed is exactly what that's going to be? It's going to take some time. So agree or disagree? The outright transition tomorrow is dead, and we're having to adjust our approach. Okay, that's 61%. Sara, let me go to you with that. Do you agree that the thinking around the transition has adjusted in the last 2-3 years?
Definitely, because, if you remember, when the first reports and first agreements was to stop investing in oil and gas. Oil and gas is bad, and, stop. Most of the banks wouldn't even fund oil and gas. Now this trend is completely changed. Not only that, many of the IOCs who had these big plans to change it, they came back to the oil and gas. Why? Because the oil and gas, they could see that the world and the way we were thinking about transition would not work. And we said it from the beginning, this is not going to work. But now, I think there is more consensus on energy, except for the US, of course. There is more consensus worldwide on how this transition is going to happen, and the acceptance that we need all kind of energy in order to maintain that transition, and that's the current situation.
Jarand, I mean, how did you vote? And give us a European perspective. You're based in Norway.
Yeah.
Europe has always been seen at the forefront of the transition in terms of from a political point of view. How did you vote and why?
Yeah, I voted number 2, but I think this question about energy transition or energy addition is also a question about which time horizon are you looking at. I would agree that it's addition if you look at the next 2 decades. But if you look at towards the end of the century, for example, then I think we can learn from all other technology shifts. When a new technology is cheaper and better, everybody is changing in the end. The steam locomotives using coal was completely dominating the world. After 20 years, it was completely dead. House warming with coal, completely out of the market, etc. So mobile telephony, nobody's using the Nokia anymore. Everybody has a smartphone. So a new technology will always outcompete the old technology. But eventually, solar, wind, and batteries will do that, but it will take longer time. So short term, next 2 decades, still a lot of scope for oil, for example. Very long term, oil will be a very important business still, but not as an energy business, as a material business. That is the real value of oil, to produce materials if you talk 100 years from now. So still an oil business, but the transition in the energy market will happen.
Jarand, Rystad, and Sara Akbar, thank you so much. A round of applause, please, for our panelists for their comments and insight. Thank you so much.